quarter. Thank you, thank you. I should point out the SOX is up almost 14% year to date.
Yesterday it was up. It was like the outperformer.
It was the up.
Yeah.
And that compares with about a 9, just shy of a 9% gain in the NASDAQ 100. So really some outperformance.
Apple underperforming, down 16% this year. And some big turnover at the top we discussed with Mark Gurman next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. A rally in several big tech names spurring a rebound in stocks. NVIDIA briefly hitting $4 trillion today. Right now, NVIDIA is up by 1.8%, just below $4 trillion. The Dow up 190, up 0.4%. S&P up 34, higher by 0.5%, while NASDAQ is up just about 0.9%, up 176 points now on NASDAQ. 10-year 4.33%, the 2-year 3.85%, gold up $14 the ounce, up 0.4%, and West Texas Intermediate crude flat on the day at $68.31 a barrel. As for the economic outlook against the backdrop of tariffs, and specifically the consumer, Nancy Lazar is chief global economist at Piper Sandler.
The consumer is reacting to the uncertainty, to the higher prices, but we don't think the consumer is going to push us into a recession. It takes a lot to push the consumer into negative territory.
Nancy Lazar of Piper Sandler. Sources tell Bloomberg Goldman Sachs Group plans to ask junior bankers to confirm their loyalty on a regular basis in a bid to limit advances from talent-hungry buyout firms. And Linda Yaccarino, who was hired 2 years ago by Elon Musk as CEO of X, is stepping down less than 3 months after the social media platform was absorbed by Musk's AI startup. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you, sir. Charlie Pellet, that is. Well, big news breaking yesterday toward the end of our program. Apple's COO, Jeff Williams, retiring as the company's longtime number 2, marking a major change of the guard at an already tumultuous time for Apple. Mark Gurman is Bloomberg News managing editor for Global Consumer Tech. He joins us from our LA bureau. So Williams is going to step down. He'll retire from the company, though, later in the year. Sabi Khan is going to replace Williams as COO. What do we know about Sabi Khan?
Sabi Khan has been Jeff Williams' number 2 for a very long time. He's been the senior vice president of operations. Now he's stepping into the COO role. He effectively has been COO for the past several years, right? His new role is the same as his old role. In addition to adding Apple Care responsibility, Jeff Williams was the COO because he ran operations, but also had several other things under his purview, including co-management of the China business, the Apple Watch, as well as the health initiatives and the company's design team. Apple said yesterday that the design team will move under the leadership of Tim Cook, which is a bit of a head scratcher, but I can get into why they're doing that. The Apple Watch hardware was actually moved 3 years ago to John Chernus, the head of hardware engineering. And the health initiatives are probably going to move to the services organization, given that they're going to a more subscription focused on health. And so a slew of different changes. Operationally, Apple is not going to miss a beat, but this is another big exit for Apple. We've been talking about this potential for the past couple of years. So there's going to be a stream of senior vice presidents and top VPs at the company exiting. They're all in retirement age. And so this is happening now, and there'll be more to come.
So, Mark, you got to assume that Apple, in making this move, or, that they thought about what might be some of the fallout and the people that will leave. So having said that, is the timing smart? Is it a case of a massive company kind of getting their C-suite and executive suite in order, as they should be doing and thinking about the future? Or is it something more of a sign of instability? What's your read?
Well, Apple's not doing anything here. They just had a bunch of people on their executive team that are the same age, right? They're all in their early to mid 60s. They all have hundreds of millions of dollars, having worked at Apple and had massive stock packages, right? And so they're just leaving. So this is not Apple shuffling the deck chairs. This is people leaving because they're retiring. They're at the end of their careers. They want to do something different. They're burnt out, right? They're tired. They want to spend time with their grandkids.
So it's not a sign of, Jeff Williams realizing, I'm never going to take over, so I'm leaving. And obviously,
that's probably part of it. Okay. Like, Tim Cook's not going anywhere. I think he's going to be CEO in a Bob Iger-like way. So I think he's going to be there another 5 years.
Interesting. CEO in a Bob Iger-like way. Just
well, without the leaving and coming back.
Right.
So
you just mean
stay.
age-wise.
He's going to stay.
Age-wise.
Yeah.
Like Iger's what, 75, 74?
So, Mark, one of the most read stories on the Bloomberg terminal in the last hour, and I got this note this morning from Walter Pychik over at, formerly of BTIG, now at Lightshed. He said Apple should consider replacing longtime CEO Tim Cook in a note. He said, quote, Apple now needs a product-focused CEO, not one centered on logistics. Are we going to start to hear more of that?
I think it's completely ridiculous. I think it's nonsensical. And I think it's absurd to put out the idea that Apple should replace Tim Cook. Tim Cook is going to be the CEO of Apple as long as he wants to be the CEO of Apple. He was put in that position for a reason, because his whole life is dedicated to Apple. He doesn't have much else going on. He has dedicated his entire being to running that company, and he has run it for the most part effectively, other than certain product decisions and design decisions. He's not a product-focused leader, but he has the ability and the power to put those types of people in the right positions. In some cases, he's done that. In other cases, he's not done that. But Tim's not going anywhere anytime soon. And the idea that he should is blasphemous, I think.
But what about the idea that we've talked about with you about when it comes to AI and different things of Apple being behind on and missteps, some of them may be big missteps.
Extremely huge missteps, but there is no misstep too big to get Tim Cook out of that chair. The credibility he has on Wall Street, the credibility he has among shareholders, among those in the company, and most importantly, Apple's board is sky high, has been throughout his whole tenure, and nothing there has changed. The problems are the chess pieces below him, and those are the deck chairs that need to be shuffled.
But wait, who's responsible for those chess pieces that are below him ultimately?
Well, we've gone into this. You know, Craig Federighi, now runs Apple's AI strategy. John Gianandrea was running the AI strategy, and Tim Cook in March sidelined him, basically put him on garden leave, so to speak, several months ago. He's sort of just hanging out there running AI research. He's not running AI products or Siri or robotics anymore. So they are making changes there. I mean, what they really need to do is start bringing in fresh talent and fresh blood by acquiring a bunch of AI companies and design companies and product-focused people. The next CEO after Tim Cook will be John Turnus, the Senior VP of Hardware Engineering. So he's a product-focused person, but there's a lot of business acumen that he'll need to learn. And as far as I know, there hasn't been any grooming process that has started yet. And, to the point, Cook's not going anywhere anytime soon. It's going to be a number of years.
But could Apple's missteps in AI change that, Mark? And I just want to push back a little bit because shares have lagged Microsoft and Meta. It's lost ground this year in the race to deploy AI. Apple shares have fallen 16% so far this year. Meta's up 25%. And Microsoft is up 19%. Could AI be a significant misstep for Tim Cook?
You're coming at me, Tim, like it's my fault. And I run the company.
I'm just...
Yes, there are a series of serious missteps. The missteps were so significant on AI that it's completely irreparable.
Okay.
Right? The only way out of this mess is to strike a partnership with Anthropic or OpenAI and rejigger all the AI to be based on models from other companies, right? I think Apple internally has been very clear that they're going to be shifting to a third-party open source model environment because, as we've discussed, their technology is completely not up to snuff. So that certainly needs to be fixed, and I strongly believe will be fixed. They're in a very precarious position, but replacing Tim Cook is not the solution. That would just create a lot of instability. I'm quite frankly surprised that note went out.
Next time you're in New York or I'm in LA, we're gonna hug it out, okay? I'm not coming at you. Don't worry. Don't worry. We have nothing but love for Mark Gurman.
Come on, I want the kids to get along.
We're getting along. Don't worry, Carol. Don't worry.
What's Thanksgiving gonna be like?
No. It'll be great.
But you know what we're saying. Everybody says it finally ends on, at the door of the CEO, like when these things, when they look at their teams.
I don't mean, the way Apple is organized and structured is that it ultimately does land on Tim Cook's desk. The buck stops with Tim Cook, as a former president, would say. But I think the changes aren't going to be the board replacing him or him stepping down. The changes are going to be him replacing the people under him who he has entrusted to make those decisions.
Got it. Good stuff. Always, always. Hey, Mark, thank you so much. Mark Gurman, Bloomberg News Managing Editor for Global Consumer Tech, with the latest on Apple and what you need to know.
It was 3 words.
What?
Shut up, Dan.
Oh.
3 words. That's what Elon Musk,
wow,
the wealthiest person in the world, posted in a message on X. Remember, he's the wealthiest man in the world, in response to a post from the tech analyst Dan Ives. Dan Ives is a global head of technology research at Wedbush Security. He joins us from New York. Dan, I had a viewer send this tweet to me yesterday, the response, Elon telling you to shut up. First of all, you were making 3 recommendations for what you think the company should do. What happened there?
Babe, look, I mean, I knew Elon was not going to be happy, but the reality is, the board, they basically need to now step it up. And I think it's something where, I hear from shareholders around the world, right, on Tesla. And as one of the biggest supporters of Elon and Tesla, it was time to rip the Band-Aid off. You got to now put a new structure. And actually one of them that we talked about in terms of the three things that we suggested is actually something Musk wants in terms of 25% voting rights. And what I view is will ultimately be an XAI merger potentially. But second, third, the political gambles and this sideshow, it can't continue.
Analysts seemed totally fine with Elon Musk, and correct me if I'm wrong, they seemed totally fine with him when he was getting along well with President Trump, and it seemed like the president's policies would favor his companies. Is that fair to say?
That's 100%. I mean, I viewed it as and we talked about it, the best that ever happened to Musk at that time was Trump getting into the White House. And obviously, you could argue Trump doesn't get into the White House if it's not for Musk. But like a lot of things, it took on a life of its own. Doge, BFFs, spending no time with Tesla, Mar-a-Lago, DC Doge, the brand issues. That ultimately is why then Musk had to take a step back and basically leave the Trump administration. But in your wildest nightmare, no one expected, hey, let's triple down, start a third political party, where now Trump actually becomes a foe, Republican Party becomes a foe. And that just becomes more of an overhang for Tesla.
So the board as it exists now, is this the board that you think can bring about the necessary changes and set the ground rules as you are calling for Tesla? And Jack Hartung, who has been CFO of of Chipotle, excuse me. Kimball Reeve Musk is on it. Jim Murdoch, of course, Elon. Robin Denholm, an Australian business executive, former accountant, chair of the Tesla board. So I'm just trying to think, is this the board that you think can execute the changes that need to be done?
Well, they don't have a choice. Now, look, is this?
What do you mean they don't have a choice?
Because they don't have a choice where sometimes boards, look, if you go back to history of Tesla, let Elon does what he do, you can never argue a bet against him. And that's been the MO, right? That's been the DNA. The problem is that essentially the clock strikes midnight when now it comes to these political ventures and endeavors, as well as the time spent at Tesla. The board, you're not going to have a major change or makeup in a board that would take many years. The board now, as a public company, needs to, new pay package, we talked about in 25% voting shares, but then establish the guardrails because it's a public company and shareholders are demanding, and the stock reflects changes that need to be made.
The board certainly is part of it, but I think a bigger picture question that I have is an existential one about Tesla, Dan, and that's with regard to Chinese competition. And we've seen sales get hammered over the last year, and the narrative has been around Musk and his association with politics, whether we're talking about that in the US or about that in Europe. But what about the China factor? Does Tesla have what it takes to compete around the world with Chinese EVs?
They have what it takes with Musk. In other words, Musk is the biggest asset for Tesla.
But they don't have the products. But they don't have products that compete at those price points and with that tech.
Yeah. So on that point, look, as someone spends time in China, competition, BYD, NIO, Xpeng, everything we've seen, clearly it's become much more of a competitive market. I continue to view as that Tesla is still a gold standard globally when it comes to EVs. I think when it comes to China, look, the big game right now that they're trying to win, it's not necessarily about deliveries. It's about can they win the autonomous and robotics future. That is the way you get to $2 trillion, the way you get to $1 trillion incremental valuation because of autonomous is that way.
It's interesting that you say that because one of our producers, Sebastian Escobar, said, hey,
great.
Waymos are coming to my town where I live in, which is just across from Lower Manhattan. And I'm like, wait, what? And Waymo seem to be expanding pretty aggressively. And so it does seem like folks are going after what could be ultimately the future, right, of Tesla. If really autonomous works, I mean, that's where the growth comes, right, going forward for Tesla, in your view?
Sure, but to that point, like, look, Waymos are $200,000 cars. Like, you're essentially in 5-6 cities.
Yeah.
When you think about the scale and scope, Tesla, we're talking about 20-25 cities over the next year when it comes to robotaxi. I mean, that's the whole opportunity. Like, when you think about 20% of what I view as like ride sharing over the next 4 or 5 years is going to be autonomous, no driver. So that's the opportunity that Tesla's going after. But then it goes back to politically, you can have Trump, Duffy, whoever else you want to talk about for an administration, not as a friend, but as a foe when you go into the most important chapter of growth and success, what I view on the horizon for Tesla.
Has Elon reached out to you? Have you reached out to him?
I mean, I won't comment there. I would just say that, like, the message has definitely been received by Elon. It's been received by the board. And that was my goal, right? Like, my goal is that sometimes it's like tough love, right?
Yeah.
Like, the point is, like, it comes down to, like, if you don't reprimand or whatever, if you, like, you know, it's like there's good times and bad times. But this is a time, and the stock reflects it, that the board, the adults in the room, whatever you want to talk about, they need to lay the guardrails out from Musk, especially around the political ambition. That is the key.
Dan, how does it feel to have Elon Musk tell you to, in all seriousness, what did it feel like to have him tell you to shut up on his platform? He's got, I don't even know how many followers he has. It has to be over 100 million, hundreds of millions
I think
at this
it's like
point.
220 million.
220 million followers. How did that feel? I mean, I imagine, too, his sort of army came after you as well.
Yeah, but I don't, you know, we know each other well. It's like, I don't worry about that. I mean, to me, I just actually view it more as like, he has his right to an opinion. I disagree. I'm a huge supporter of him and Tesla, but I'm more focused on like it creating dialogue. Like, he'll say, "Shut up, Dan," and I have 100 memes sent to me about different "Shut up, Dan" stuff. And actually, a guy in the street yesterday yelled from New York City across the streets like, "Shut up, Dan." So that's
Okay.
that's cool. But to me, it's about creating the dialogue, because now it's like, okay, what is the community? What is share? I'm here from shareholders all day, right? That's the important thing. What it means for the Tesla story. That's the whole goal.
I wonder, has the board reached out to you and said, "Hey, thanks, Stan, for that
Or members of the board?
assist"? Yeah.
No, I mean, the good thing is, like, I definitely feel like this message has been received by the board. You know, I think everyone's seen it. And at least now, look, now it comes down to, like, okay, are there actions? Like, what does the board do with the next pay package? Remember, the other $56 billion pay package is still in the legal sort of limbo because of Delaware. Proxy still hasn't been, you know, ultimately sent. That's been delayed. So this is a key period of time for the board, for Musk.
Another message that was received for the world of Elon Musk was from the CEO of X, Linda Yaccarino, stepping down as CEO after 2 years. Post on X, decided to step down as CEO. I'll be cheering you all as you continue to change the world. What's your view on that? How do we read that?
I think I have a very, like, positive view of her, right?
Yeah.
Besides the fact that she's a Penn Stater, we are. But that,
all right,
my
pull
view,
back. Let's, you know.
my view is she turned around X. She navigated massive political storm, right? I think very few people could have done. The advertising, I think a lot of it has rebounded. There's still obviously clear headwinds. But I think, like, this is, like, look, it's huge shoes to fill. Like, it is a big hole, her leaving, because she has a unique background, because of advertising, because of her personality. I think she got along very well with Musk. So it is a huge, you know, what I view, it's a negative, but now it comes down to like who fills that role.
Yeah, interesting stuff. Listen, we're so glad we could catch up with you.
Thanks for
I'm
taking
so
the time,
glad
Dan.
to be here.
Yeah, we really appreciate it.
I'm so glad to be here and talk. And this is get the popcorn out. A lot of soap operas ahead.
Well, you know, if you want to not be yelled at on the street, Dan, you're gonna have to tone down the wardrobe a little bit and go incognito, and not wear the signature Dan Ives clothes. I don't know if you need to go incognito, but you know, I love it. We love it. Dan Ives, Global Head of Technology Research at Wedbush Securities, joining us from New York. Let's get on over to Charlie Pellet because we are, just about 17 minutes away from the close. Hey, Charlie.
Indeed, holding on to gains. Tesla shares, by the way, they are down on an update for the rest of the market. We're looking at Tesla down now by just about 0.2%. But let's find out what's happening with equities. The Dow, the S&P, NASDAQ, they're all pushing higher right now. NVIDIA leading the way up 1.7%, a rally in several big techs, spurring a rebound for equities. NVIDIA's market cap briefly hitting $4 trillion. Again, NVIDIA right now up 1.7%. The S&P up 32, up 0.5. The Dow up 189, up by 0.4%. NASDAQ up 169 for the NASDAQ Composite Index. That is a gain right now of 0.8%. Our Bloomberg Mag 7 Index, of which Tesla is, NVIDIA is a big part. We've got that index up now by 1.1%. 10-year 4.33%. The 2-year 3.85%. Gold up $14 the ounce, $33.16, up 0.4%. And West Texas Intermediate crude down 0.2%, $68.22 a barrel. Again, NVIDIA, $4 trillion market cap, briefly earlier today up 1.7%. And Tesla, cannot ignore that stock. It is down by 0.3%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
The funky music will drive us till the dawn.
on Bloomberg Radio.
It is the Drive to the Close. Just 15 minutes ago until the close. Let's bring in Stephen Skanke. He's Chief Economic Advisor at the wealth advisor Keel Point. He's also former U.S. Treasury and White House National Security Council staff member. He joins us today from Cape Canaveral, Florida. Stephen, we wanted you on the program for a couple of reasons. One, to talk about the Fed and your experience in Washington. And that's where I want to start. Because as we learned from the Fed meeting, or the Fed minutes rather, it shows that the committee is split around inflation worries. Do you think the Fed should be concerned about inflation, or the Fed should not be concerned about inflation right now?
Well, thanks, Tim. It's always great to be with you. And clearly the Fed needs to be concerned about inflation. That's one of its two principal mandates.
The reason I ask if it should or shouldn't is because the president is not concerned about inflation, and he says inflation is gone and the Fed should cut.
Yeah, and that's great, and that's why the Fed is at least semi-independent in the way it conducts its business. And you know, it was given its mandate by Congress to be concerned about inflation and about labor markets. And that's what it's done. I mean, it's great that President Trump is not concerned about tariffs and inflation, but the rest of the economy and even financial markets are certainly have that as something that they are concerned about.
Well, I am curious too, you know, Steve, as you guys advise your team there at Keel Point, when it comes to the economic outlook, we're still kind of waiting for all of the factors to be put into kind of the economic balance sheet when it comes to what really will be the tariff cost, right? Like we're waiting, and now we have to wait even longer as President Trump has pushed off some of the tariffs or the tariff deadlines until August 1st. So we continue to kind of wait and see. But isn't it safe to have an assumption, we already have a 10% tariff in place, that there are going to be higher tariffs? Or do you think net there won't be much of an economic impact. And that economic impact, of course, then won't have such an impact, a bad or negative impact on U.S.-based investments, dollar-based investments?
Well, that's a great question, Carol. And what we're seeing is that the tariff impacts are starting to show up in different places. In earnings outlook, where companies have decided that they're going to absorb some of them. In what consumers are paying. The big belief is that we'll see it in the June CPI that comes out next week, and in the June PPI that also comes out next week. Those will be first indicators. Businesses were very shrewd about building up inventories in advance of the tariffs, and so they've been working through those, and that has helped delay the impact. But I don't think anyone doubts, well, certainly no one in the business community doubts that tariffs are going to have an impact on the prices that consumers pay, to the extent that the businesses can't absorb them in their own profit margins.
What does that mean, you think, ultimately for the U.S. interest rate picture? On a day when we've seen yields all along the curve move down, what's the longer-term thought for you when it comes to U.S. rates? Is it more like a 10-year above 5 or a 10-year below 4? And just got about 30, 40 seconds here.
Well, we don't see a 10-year below 4. We see it at 5, maybe not too much above that. Longer-term rates are also going to be higher. And unfortunately, every effort the president makes to try to push rates down, or say he's going to have a Fed chair that's going to push rates down, really has almost the opposite effect. And of course, that's a concern in our outlook.
All right, we're going to leave it on that note. Steve, good to get some time with you. Steve Skanke, Chief Economic Advisor at the Wealth Advisor. Keel Point, a former U.S. Treasury and White House National Security Council staff member, joining us from Cape Canaveral, Florida on this Wednesday. All right, folks, we're coming up on 10 minutes until we wrap up this trading day on this Wednesday, and you're looking at stocks just still off their best levels of the session, but green across the screen.
Yeah, the S&P up 0.6%, the NASDAQ composite up 0.9%, the Dow up 0.5 percentage point. Coming up next, it's our cross-platform coverage of the market close. It is the closing bell. That's next.
is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, Carol Massar, she promised we would talk tennis.
Yeah.
And we're going to talk tennis.
Because we wanted to do it for someone we really care about.
It's one of the most read stories on the Bloomberg terminal.
And
there was a lot of news
our
last week.
producer Elizabeth Sedrin really loves tennis. Didn't she? Did she? Did she send it to us? Did she send it to us?
I sent it, but that's okay.
Okay, sorry.
That's okay.
Okay.
It's fine. I'm sitting right here.
Remember me? Bill Ackman. Like, this was something we talked about, what was it, last week?
Yeah, last week.
Yeah.
I was out, but I was paying attention.
You were?
Yeah.
Were you listening to us?
I saw the headline.
Okay.
Yeah.
That's all that matters.
It was on the 3rd.
Okay. So billionaire hedge fund manager Bill Ackman, you know him. We talk about it a lot. He's been on Bloomberg Radio, Bloomberg Television. So apparently he was trying to make tennis history, and he's going to have to wait. Everybody's going to have to wait, I guess.
He has failed to become the oldest player to receive an official ATP ranking or official ATP ranking points. The 59-year-old, who was paired with doubles Grand Slam champion termed pickleball pro Jack Sock, lost at the Hall of Fame Open. They lost in 2 sets, 6-1 and then 7-5. So they lost to Omar Jaiska and Bernard Tomic. Jessica and Tomic breezed through the first set. They won it in 21 minutes.
That's fast.
That is very fast. Ackman struggled with his serve and lacked consistent baseline play, but managed to get clean volley finishes at the net. Struggling with your serve.
Not good.
Not good, because the serve, you're in complete control of the serve.
That's yours.
That's why in tennis,
Well,
being on
you
serve
used
is
to
so
play
important.
tennis.
Oh, I played college tennis.
Yeah.
But there's so much pressure on you. And that's a difference that pros have versus mere amateurs, mere mortals. Because those pros are so used to being under pressure, having everybody watching them while they're serving.
Yeah, and maybe he's just, it's really amazing because you consider some of the pressure he's probably been in the financial universe, but it's different.
You could hit, thousands of serves a day. You wouldn't want to do that because of your shoulder, but you could do that, but you could never replicate what it's like to do that in front of a live audience on center court.
Did you feel it like when you were playing?
Tennis is a very mental game.
So did you get psyched out?
Yeah, I mean, this is a game.
But you're competitive, so I could see you going up there and being like, bam.
I'll never forget what a friend of mine who actually ended up becoming a psychologist said in a high school psychology class, because I went to a high school in an area that had a very big tennis tournament, a very big amateur tennis tournament in Ojai, California. And we would help out at the tennis tournament, and you could get to watch the tennis tournament when you were students. It was pretty cool. And he basically said, if you were in any other context and saw these players screaming at themselves, you would think that they would need some sort of help with mental health, with wellness. But because they're on the tennis court, it's totally appropriate.
I got it. I understand.
Yeah.
But we see it, I think about the times you've been at the Open, right?
Same thing with pros.
It's
except the top of the top.
The top of the top.
Yeah, you can see, you still see Djokovic get angry.
Yeah.
But it really hurts their game when they do that.
Right. They've got to be in control.
And it is really hard to be in control of that as an amateur or as a pro, as the pros show us.
Well, I will say this story goes on to say that Bill Ackman, no stranger to stirring up discourse on social media, drew mixed reactions in tennis and financial circles alike, with critics dismissing his appearance at a pro event as a gimmick, while supporters saw it as a display of determination. Well, you know what? Two sides to a coin. Some love, some don't.
Pretty
it's
cool.
Just the way the world works.
Pretty cool, either way.
Pretty fascinating, too. And that is, as you said, right? Is it our most read story on the Bloomberg?
It's got a... what's it called? Yeah, it's got a read spike. I got an email alert about it. People everyone in the tennis chat is talking about it.
Third most read in the past 60 minutes, behind Amazon Prime Day sales falling 41% in the first day, and then the Fed minutes, what they showed. And then comes Bill Ackman and his mission.
Little deep tease. We will be at the U.S. Open. You will not be.
I know. I'm going to miss it. I
this year.
love the Open. I love the energy. I love the event. It's just unbelievable. And I'm not a tennis person, but man, I love watching these guys play. I've gotten to see, I think, Serena in her last match. It's good stuff.
Before the Open is the end of Wimbledon, of course, this weekend.
Good to know. Good to know. Hey, do not go anywhere. Got about 2.5 minutes to go. We're going to count you down to the close. The closing bell. It starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic alongside the illustrious Caroline Hyde taking you through to the closing bell with the global simulcast. It starts right now. Tim Stenevec in the radio booth. His assistant, Carol Masser, joining him for one day this week. Welcome to our audiences.
Can I take a letter from somebody?
Across all of our Bloomberg platforms. Here on, I guess we could call it a record-setting day, at least for NVIDIA, a record high, and briefly, a $4 trillion market cap.
Yeah, briefly before dipping back down. But, you know, you take a look at the Mag 7. I'm looking at the Bloomberg Mag 7 Total Return Index, and you've got 6 of the 7 names all higher today. So if you want to know where some of the momentum is, and this is something we talked about with Gina Martin Adams, investors continuing to plow money into those kind of really mega cap tech names. That's where it seems to draw the most attention.
Not looking like a record, though, for the S&P 500 today, Caroline. We are just about 0.3% from that all-time high that was reached back on July 3rd. So that record is safe for now.
Safe. We wait to see what can catalyze it. I think the bond market has really spoken to the stock market today as well. The fact that those auctions went well, the 10-year catching that bid, the yields scream lower for the first time in about 5 days. Maybe that juices some appetite when it comes to the stock market.
We should also point out, just looking at the cross-asset picture, you're seeing Bitcoin now back around that 111,000 level, and the VIX below 16 right now, and that raises a lot of questions as to whether people are ignoring potential risks and volatility out there in the markets.
Makes me wonder if some of that risk could be in earnings, right? We're just, what, about a week or week and a half away?
No, Carol. Tomorrow. Delta reports tomorrow.
No, you know.
Do you not pay attention
about JP Morgan on Tuesday?
Come on, you know when it unofficially starts.
The earnings season officially kicks off tomorrow. Delta and ConAgra set to report earnings. Meanwhile, here on the day, green across the screen for most of the major indices and averages here in the great United States of America. Dow Jones Industrial average higher by more than 200 points or 0.5%. The S&P 500 just shy of its record high, 62.63 and change, up about 0.6%. The NASDAQ Composite and NASDAQ 100 each up just a little less than 1% on the day. The Russell, believe it or not, that's your outperformer once again, and maybe that's a good sign, rallying 24 points or 1%.
Yeah, that's kind of interesting to see that outperformance there. Hey, S&P, I'm going to go back to the big caps, if I may. 302 names in the S&P 500. Caroline, higher today, 200 to the downside, 1 unchanged.
Meanwhile, I'm looking at the sector breakdown. If you're looking at the S&P, utilities lead the charge, up more than a percentage point, but you got big old tech doing its groundwork as well. Communication services, of course, you fold them together, and that is why you've got NVIDIA, Meta, Amazon as your leaders of the pack from a points perspective. Consumer discretionary in the red, consumer staples, a little bit of energy too.
All right, a lot of green there. I'm going to go back to something that Romaine mentioned earlier, and that's NVIDIA. It did top $4 trillion in market cap. First time for a company to do that ever. And we are seeing it, though. It did close at $3.9 trillion, so a little bit below that. But nonetheless, the stock up about 1.8% in today's session, up about 21% here in 2025. So a big milestone for that company. Meta Platform, another of the Mag 7. This went up about 1.7% in today's session. This was a top gainer in the NASDAQ 100. The company buying a minority stake in Luxottica. We've talked about this before, that relationship.
Yeah, we talked about it yesterday.
Oh.
You weren't here. Sorry.
Something's never changed. It's like it's just like.
Are you getting flashbacks, Caroline?
I gotta go.
Now you know why she left the close and went to Bloomberg Tech.
She's come back.
He's
right?
going to mention your boat in a
this.
minute, Caroline. I'm just.
Oh, I forgot about the boat.
Shh, Caroline, come on. So anyway, deepening its commitment when it comes to the smart glass industry, according to folks in the know. So it looks like they've got just about 3% of the stake. I'm going to stop talking because apparently you talked about it yesterday. But I am going to the number one gainer in the S&P 500. That's AES. And this company up about 20% here at the close. So pretty much closing at its highs of the session. Bloomberg News, an exclusive reporting this morning that the company, it provides renewable power to tech giants like a Microsoft, exploring options including a potential sale amid takeover interest. And this is again according to people with knowledge of the matter. So a lot of speculation, but nonetheless, investors definitely taking note of AES. Again, up about 20% in today's session.
Investors also taking notes of cocoa prices. Have you guys seen cocoa prices?
Yes.
They are high. Cocoa powder is in short supply. I've got a little bit of a food theme with today's decliners. Hershey, the second worst performer in the S&P 500 today, down 4.7%. Cocoa powder used in everything from baking mixes to protein shakes. It's now in short supply. Prices for the ingredient surged about 16% in the past year. They're now trading near a record. Companies such as Mars and Hershey, they have different tactics to try to reduce their reliance on cocoa powder, reduce bar sizes, add things like nuts. They've even promoted non-chocolate products altogether. Nonetheless, shares of Hershey down 4.7% today. We should note that yesterday shares fell 3%. The company did name Wendy's CEO Kirk Tanner as its CEO, replacing Michelle Buck. That's going to take place effective August 18th. On to beverages. Monster Beverage down 3.3% today. This after Rothschild & Co. Redburn analyst Charlie Higgs cut his recommendation on the company to neutral from neutral to buy, citing valuation and gross margin pressure from tariffs, an increase in prices on aluminum. So some concern there. Shares fell 3.3% today. And how about some conveyor belt sushi? This is a close to $1 billion market cap company. Shout out to Carol Masser for sending this one my way. Kura Sushi fell as much as 16.5%. This is a company, they've got 78 locations in the U.S. They've got 9 of them on the way. There's actually a location in Flushing that we can go to try it out, do some research.
Trip.
Let's do it.
Sweet
Shares
shrimp,
fell.
octopus, squid, salmon, tuna, snow crab.
Okay, so you already
DES page.
Wow, you already know what you were going to order. Shares fell even after the company raised its sales guidance for the full year.
Maybe not.
Citi says that the longer track record of earnings outperformance is needed to justify its lofty valuation. Shares are up more than 500% since the company IPO'd back in 2019.
Hey, just real quickly here, in the crypto space, we're just now seeing Bitcoin actually retop that $112,000 level. Of course, that was the record high, falling back below that just now. But again, still trading at that level as we talk about risk sentiment coming back into this market with that big push higher. And I mean, obviously, apparently, I'm missing out here. And now crypto back to the top. Just real quickly, I do just want to point out yields on the day, too, because we talk about some of the concerns about that auction, which seem to have gone well. And you see the drop in yields on the day. In fact, this is the first time we've seen a drop in yields in the previous 5 sessions. So a 6-day here, finally a little bit of a rally in prices, though I should point out that one of the key parts of the curve, that 5-year, 30-year yield curve continues to re-steepen.
All right, folks, I solemnly swear that I have not lined up a job in private equity. And apparently Goldman is asking some of its analysts to do just that. They're talking to their junior bankers, and they basically want to have them confirm their loyalty on a regular basis so that they don't want them all of a sudden coming to work with them for a little bit and then leaving for a job in PE.
Is that legal?
Well, a spokesman for Goldman says, quote, "We are committed to a culture where our employees act with integrity, consistent with all of our policies. This move meant to thwart poaching by PE firms that have been signing up junior bankers near the start of their on-the-job training. It's called on-cycle recruitment. Some buyout shops are even approaching newbies before they show up for their analyst programs."
And it's one way of saving on training, isn't it? Like you go in, you get someone else to do it for you.
Isn't that what it's supposed to be out?
But then do you phone it in for those 18 months or whatever? Because you know you got a job lined up?
Maybe, potentially here. Sorry, guys, to break up the conversation here, but we're actually getting some news on Kellogg here, actually rallying about 40% in the after-hours trade. Are now learning that Ferrero is nearing a deal, a $3 billion deal to buy WK Kellogg. Of course, this is the cereal company. Remember, they kind of split in two here. You have the snacks business, and then you have the cereal business. I believe WK Kellogg, that's still the cereal company. This is according to people familiar with the situation, and say that a deal announcement could come as soon as this week.
Well, good to see some deal flow happening, right?
This is all Allen & Co. Everyone's over there in Idaho.
Yeah, and we were just talking even before the simulcast here. There was that report about Autodesk looking to buy out one of its competitors, PTC. That would be a deal of a few $1 billion as well here. So a lot of activity, a lot of cash being splashed, Caroline.
Apparently that's a British phrase. I never knew. Or at least I taught it to remain, anyhow.
Frosted Flakes, Fruit Loops, Rice Krispies, Raisin Bran.
Have you eaten any of that, Tim?
Have your kids?
If my kids, this would be bad news if my kids knew about some of these. Yeah, these were not allowed in the Stenevec house. Some of these were not allowed in the Stenevec household growing up.
You are a healthy guy.
Corn Pops, though. You know, I have a soft spot for Corn Pops.
I don't even know what
they used to be called Sugar Pops, my dad told me.
Oh,
That's what they got in them, mainly.
Sugar
that's
puffs.
good. Truth in advertising.
Yeah.
It's like
Now
sugar
corn.
smacks.
All right.
Remember those?
Shares of WK Kellogg, I'm just going to go back there, up about 40% here in the aftermarket. So something to certainly keep an eye on. All right, guys, that is a wrap. Good to have you here,
Are
Caroline.
you back tomorrow?
I am.
Oh, okay.
You really are back just for
Always
one
have to
day.
check.
Just for one day.
Just for one day.
Just for one day. That's a wrap. Our cross-platform, radio, TV, YouTube, Bloomberg Originals. We do it all. Caroline and Romaine, of course, finishing up there and continuing on television. Tim and I back here on Bloomberg Business Week Daily on Bloomberg Radio. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That's Carol Massar. I'm the producer's worst nightmare. I'm just going to say that. I am our producer's worst nightmare. They literally telling me
It's
not
nice to pass the baton to you.
Yeah. No longer Carol Massar. It's not Tim Stenivek. I ask for something. They say, don't do it. I say, I'm going to do it.
Pressure.
On. Hey, media moguls, billionaires, and some of the biggest names from tech, media, business, and finance and sports are in Sun Valley, Idaho for Allen & Company's annual conference, a series of big picture panels, networking, relaxing in the mountains too. Bloomberg's Ed Ludlow is there. He's not relaxing because he's been working too hard to do that. He's the co-host of Bloomberg Technology on Bloomberg TV. He joins us from the annual conference in Sun Valley, Idaho. Ed, I want to talk to you about Sam Altman and the glasses that he was wearing yesterday. I've seen this clip quite a bit. What are these Johnny Ives glasses?
They are not. They're not smart glasses of any type. And when we asked him about whether whatever it is that OpenAI and IO are working on, whatever form factor the device is it smart glasses? He said, well, I'm not going to say, but these are not smart glasses. This is taking us down a worrying path. If you think you're a producer's worst nightmare, well, you know me very well. Everyone around me here is sort of waving frantically saying, don't do it, don't go there. But actually, those glasses have been in vogue here for a number of years. I'm thinking about Alex Karp, the Palantir CEO, strides around this place in his athletic wear, wearing those as well, that style. So that must be in among the very powerful and wealthy. Let's move on to other subject matter, shall we?
I love all the reporting that he's just walking around in very strange glasses.
That's what
I know.
I think a big focus of that, people saw him wearing those glasses. They know about the acquisition of IO.
Right.
And they're like, is there some relationship here? Like, is he showing something off that we haven't seen before? But it turns out that, billionaires like glasses.
They just do. They just do. All right. So what do we need to, what's really kind of top of mind for everybody who's there this year? Because sometimes I feel like there's themes, there's narratives, but I'm just curious.
So in the public domain, like on the serious side, Sam Altman did walk up to the camera and we talked about the idea that he's not yet spoken to Mark Zuckerberg, the Meta CEO, since he accused Meta of poaching talent with 9-figure comp packages. But what he said was that he expects to see Zuckerberg this week. We've not actually seen him ourselves, and that he's looking forward to talking about it. And he kind of outlined that his strategy for AI and keeping talent is to have the best research lab, the best company, and be mission driven. But what's so interesting about Allen & Co is like usually every year there's some kind of key single name. So in 2022, it was Elon Musk, right? Because he was in the midst of trying to walk away from the Twitter deal. And on that Saturday morning, he gave the kind of keynote presentation, which ironically Sam Altman moderated, by the way. In years gone by, it's been Warren Buffett on a Saturday. There isn't that one single name this year other than Scott Bessent, the Treasury Secretary, is here. Maybe we can talk about that. But people genuinely are super interested in this dynamic between Zuckerberg, Altman, and of course Tim Cook's here as well. And there's the reporting about Apple's chief model engineer going to the Meta squad as well. So that's a really important feature.
Wait, why is the Treasury Secretary there?
Well, what I can tell you is that in the late morning session, the Treasury Secretary gave a presentation and some commentary about his views on the US economy. Remember that Allen & Co. is a fully off-the-record conference. Participants sign NDAs when they come here. I am less than a mile from the front door, but the media are here unofficially. So what we report is distinct from participation in it. It's not completely unusual. You know, 2023, Gina Raimondo, who is still serving as Commerce Secretary, was here and gave a similar presentation, I'm told, by sources, and I reported at the time. That was super focused on Taiwan and semiconductors at that time. So it's not unheard of, although I would observe that a lot of people have told me that in the first Trump administration, 2016 to 20, to the best of people's memories, a sort of sitting cabinet member didn't attend. But of course, Scott Bessent has that background in finance that Allen & Co. is associated with.
Okay.
This event is known for leaving journalists outside at the doorways to get their moments with the attendees. You're not actually going to any of these panels, Ed. It's an event that doesn't include journalists, but yet we do hear from a lot of the folks attending. Have you found this year they are just as receptive to talking to you, and they're stopping and actually talking? Because not everybody wants to talk to the press at these things.
Yeah, the usual suspects, to be honest. You know, David Zaslav, who's the Warner Brothers Discovery CEO, always stops, and we talked about the debut of Superman at the box office, and in his opinion, Superman did very well. He said that the critics loved it. I don't know that that's what I've been reading about Superman, but we got in a little bit into the nitty-gritty of Warner Brothers' plan right now to split into two distinct businesses, a pure-play streaming platform and then a pure-play studio, and he basically indicated that was on track. Bob Iger said hello, the Disney CEO, but when we asked him about that reporting on the Disney Hearst asset A&E being up for sale, he didn't want to talk about it. So it's still rare, it's still unusual. What I find interesting as a technology journalist is that historically this was TMT with a big emphasis on media. Increasingly, it's about very deep tech names across software and hardware. Lots of participants like that here. Some of them will be joining the show in the next day or so. And they're here because, of course, Allen & Co., many of the bankers at Allen & Co. are seen as like Silicon Valley's favorite bankers, highly involved in those late-stage private growth equity rounds, pre-IPO, things like that.
What do you want to know? Who do you want to talk to, Ed, while you're there?
Yeah, I think really right now, what's so interesting is the competition between the world's biggest technology companies. So right now, at least to the best of my knowledge, you have Andy Jassy here, Sam Altman, Satya Nadella, Sundar Pichai, Mark Zuckerberg, as is reported, although we've not seen him. And they're all competing for this latest and most rare of commodities, the super talented AI engineer or computer scientist. And I wrote a little bit about this earlier in the week, but in the M&A landscape, acqui-hires have become a much more common feature. We've talked a lot about them, most recently with Scale AI and Alexander Wang, but not entirely new. Remember that Microsoft did an acqui-hire of Inflection AI, and that's how they brought Mustafa Suleyman to lead their AI business there. But you have to pay big bucks as part of that process, and so inevitably that's a conversation that's going on there. Generally, I think that people also, away from Bessent, really focus on geopolitics, because there's a lot of exposure in the technology sector already across TMT to policy, regulation, and the relationships between different nations. And I know that a lot of people on the sidelines are talking about that.
You sure you don't want to go back to the glasses?
Carol just saw.
I just saw
She
them.
just saw the image
I
because
just saw
we
the
pulled it
image.
up.
We just put it up. I know. We're like, we're just wacky. It's like shiny new thing.
Ed's gonna come back from Sun Valley with those, Carol.
Yeah. Maybe next hit. Maybe tomorrow?
Maybe.
Maybe.
Actually, scoop for you guys. I'm actually in New York next week, so maybe I'll sport them. But yeah.
Okay. All right. We're gonna
You can
hold
catch
you.
Ed Ludlow in person here in New York City.
I
We're
will
looking
miss
forward to
you.
that.
I will not be here, so I'm sad to hear that I'm going to miss you. But next time around, safe travels, kiddo, and looking forward to all the reporting that you're doing out of there, the continuation of your reporting. Ed Ludlow, he's the co-host of Bloomberg Technology on Bloomberg TV, joining us from Allen & Company's annual conference in Sun Valley, Idaho. Pretty cool stuff.
Very cool stuff. A beautiful backdrop, too.
He's so right, though. It's just interesting. It used to be really just media, right? Media, cable, like all that stuff. But it is so much technology. And it kind of makes sense.
Yeah,
like,
and this
where
is the
our
place
world
where deals are done, where, you know, Yahoo buys AOL and stuff like that.
Yeah.
Yeah.
Right?
Or AOL buys Yahoo. I don't remember what happened.
I don't know.
Was it Yahoo?
AOL and Time Warner?
No, this is after.
Oh, you're
This is
talking
the
about
next
after that.
iteration. Yeah, but I mean the classic stuff, right?
Yeah.
That was the Tim Armstrong era.
All right, do not go anywhere. We continue right here on Bloomberg Business Week. We're talking a little bit about Harvard.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Developing story, just getting word. Headline right now on the Bloomberg Professional Service. President Trump is going to impose 50% tariffs on goods from Brazil. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. An update for the U.S. equity market. Bitcoin, though, setting a record after topping $112,000 for the first time. Bitcoin right now trading at $111,000 before pulling back. Bitcoin today up by 2.3%. The Dow, the S&P, and NASDAQ all advanced today. S&P up 37.6236, gain there of 0.6%. The Dow up 217, up 0.5%. NASDAQ up 192, up by 0.9%. The Mag 7 index, of which NVIDIA is a part, that was up 1.1%. NVIDIA hitting $4 trillion in market cap briefly today, up by 1.8%, 10-year 4.33%, 2-year 3.85%, gold up $10 the ounce, up 0.3%, and a retreat for crude, 68.27 a barrel, WTI down by just about 0.1%. So again, repeating headlines from the Bloomberg Professional Service, Bitcoin setting a record after topping $112,000 for the first time, and President Trump will impose a 50% tariff on goods from Brazil. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. Do appreciate it. Well, President Trump's administration is intensifying its fight against Harvard, warning that its accreditation may be in danger and formally moving to subpoena the school in a bid for information on foreign students. Here's what's going on. The Department of Education and the Department of Health and Human Services said Wednesday that they'd notified the New England Commission of Higher Education that Harvard may be in violation of anti-discrimination laws and failing to meet the commission's accreditation standards, citing anti-Semitism on campus after the start of the Israel-Hamas war. Brooke Sutherland is Bloomberg News Boston bureau chief. She also writes the Bloomberg Industrial Strength newsletter. She joins us this afternoon from Boston. Brooke, good to have you with us this afternoon. What specifically is the Trump administration alleging that Harvard University is doing and not fulfilling its mission to serve students?
Sure. The criticism has morphed. It is really a focused critique of Harvard's handling of anti-Semitism on campus in the wake of the Hamas attack on Israel in October 2023, and Israel's retaliatory response has really sort of evolved into a broader criticism of higher education in general, and questioning over diversity initiatives, and the way in which Harvard prioritizes certain viewpoints, and really sort of a broader push for more government control over the way in which the university runs itself. And so it's hard to necessarily sort of pinpoint one particular critique at this point, just because it really has snowballed into a number of different areas. And to your point, this really does mark sort of a re-escalation of the Trump administration's battle with Harvard. There had been talk and some optimism that maybe this was moving towards some sort of a deal, and this would signal that that is not the case, and that this remains, a contentious situation.
I mean, Harvard is so important, right, to the Boston economy. Can I say it? I don't know what the right adjective is, but it's pretty important.
Yes, absolutely. It's very important. It is, it's really the backbone of the Boston and the Massachusetts economy is the eds and meds, eds being educational institutions, meds being, the preeminent hospitals that are here and really are sort of built on the ecosystem of having Harvard and MIT and all of the other wonderful universities that we have here in Massachusetts. And so this really is, it's a fight with Harvard, but it's also a fight with Massachusetts. And you have seen Massachusetts politicians really rally around Harvard in this instance, not just because, Harvard is seen as standing up against the Trump administration, but I think there's also a recognition that this institution is so important to the economy that we have here and to the broader higher education landscape.
What is the end game that folks at Harvard or even the Boston area think that the president is going after? Is it the concerns about, discrimination? Like, what do they see as really the end game here? This kind of back and forth, because it felt like things were moving forward, and then to see this and hear this today, it felt like, okay, now, there's problems again between the White House, the president specifically, and Harvard.
Sure, and it's more likely probably that the problems never really went away, and this is a way of sort of exerting pressure on the talks to get Harvard to agree to what the administration wants. I think certainly the concern, for those who want to support Harvard is that what the administration is trying to do is make an example of Harvard, looking at them as, really sort of the preeminent example that comes to mind when you think of higher education in the U.S. You think of Harvard, and I think sort of forcing the changes that it wants to happen in terms of how Harvard runs itself would signal to the rest of the college system across the U.S. that they would need to comply too. And so I think that is really the concern for those who want to support Harvard, is that if Harvard were to give in to their demands, then what does that say about anybody else who might be further down the line? But it is tricky. I don't envy Harvard in trying to figure out how to navigate this situation. Obviously, as we see with this move today, the federal government has a lot of power, and the Trump administration has not been hesitant about pulling every single possible level to ramp up the pressure on Harvard. But at the same time, you have students, you have alumni who have really rallied in support of Harvard and do not want to see them give up any of its values, any of those things that it holds most dear in whatever kind of deal might come through with the Trump administration.
What is at risk for Harvard? We talked about the effect on the greater Boston area, eds and meds, but what's at stake for Harvard? I mean, this is a I almost said company, because the Harvard Corporation has a $53 billion endowment. Does it have what it takes to take on the federal government?
Certainly Harvard is in a better position to take on this fight than many other universities, partly because it is so prestigious and because it does have that endowment. But, sort of a common misconception is, oh, well, they have all this money, and so why don't they just use that instead of relying on the federal government? And it doesn't really work that way. Most of the money that's in the endowment is earmarked for specific projects, whether it be sort of research endeavors or building a new dormitory, building a new building, whatever it might be, or it's locked up in sort of illiquid investments that Harvard can't necessarily easily access to sort of tap cash flows as they come up. But certainly, I mean, if you look at kind of what the Trump administration has been doing, they've very much been going after sort of the key financial aspects of Harvard. And it very much is a business, to your point. And I think, what we're seeing is sort of a recognition in the higher education world of, yes, this is about education. Yes, this is about teaching students, but it is also a business, and you have to have money to be able to do those things, to support research, to, continue to advance different missions, different causes, whatever it may be. And I think that's really what we're seeing be redefined in front of our eyes here.
If they lose their accreditation, what does that mean? Like, ultimately, what's the impact?
It would be pretty serious. So accreditation is what, allows students attending a school to access federal student aid. It also sort of is a stamp of approval that you're getting a quality education. And so it would be a pretty serious step to take away Harvard's accreditation, or any schools for that matter.
Well, but Harvard is Harvard.
Right.
I know this is what you're thinking, Carol. I mean,
right.
It's like the Harvard brand is internationally known as being among the best of the best. Is that at risk?
I think it's too early to say, but I do think you have to worry about that, specifically as it relates to research of, if Harvard is in a prolonged fight with the government, and that money does not, start flowing in the way that it had been before, does it make more sense to go to other research programs at other universities where that risk is perhaps not as great? Obviously, other universities have been facing pressures of their own, particularly as it relates to federal grants through the NIH or through the National Science Foundation. So this is certainly not limited to Harvard. It's just more extreme at Harvard. And then I think with international students, that's the other big question mark. This is, of course, a key source of revenue for any university, as international students tend to pay full tuition. And I think the risk is that even though right now the federal judge has, issued a preliminary injunction in the Trump administration's efforts to ban international student enrollment at Harvard, I think if you're an international student, you have to worry about, well, how does that play out? And do I risk getting stuck somewhere and having my student visa revoked, not being able to finish my degree? And I think that's what Harvard is concerned about, is what do those students decide to do? And do they ultimately end up picking another institution?
No, but like you said earlier, and I think we've had other conversations too around our table here in New York, Brooke, you target Harvard because if they in any way fold on certain issues, right, you can just assume the rest in higher education are going to follow suit, because Harvard has deep pockets. Harvard is Harvard. And so that's why it makes sense that it's being, or some would say that that's why it's being targeted, right? Like everybody's just watching just so closely to see how they react, because it will probably potentially set the tone for what other universities do.
I definitely think that's true. And I think, Harvard also realizes that, and they realize that, as much as this is about Harvard, it's also a much bigger debate about how we want to run higher education institutions in this country and whether the government should have a say on how that's done. And Harvard would say that what's happening is government overreach, and that is not the role of the government to dictate those things to a private institution that's focused on higher education. And, in this country, we encourage freedom of speech, exchange of ideas, and Harvard in its statements has said that it's very much committed to preserving those values and making sure that whatever the outcome of this, that they continue to do that. But to your point, exactly, I think that there are so many colleges and universities watching this and waiting to see how it plays out and what the ramifications for them might be. Harvard has certainly been, at the forefront of this push by the Trump administration, but I think it's likely that, depending on how this goes, that this is not where it stops. And so I think there's people paying attention to this.
One thing that I found interesting, and this is not, I'm just drawing a sort of comparison here, but I think it's worth noting that the IRS yesterday said that churches can speak about political campaigns and candidates to their congregations without losing their 501c3 status. So there's this ability for churches to be political in a way that may not necessarily be extended to other nonprofit organizations. I don't know.
It's an interesting distinction.
Yeah. And it's not apples to apples, Brooke, by any means, but there's a lot of notable things happening when it comes to this idea of freedom of speech right now. Just 30 seconds.
Yes, and I mean, that is another, lever that the Trump administration has threatened to pull, is reviewing Harvard's tax-exempt status. And then, separate from that, the universities with large endowments like Harvard are also facing an increased tax on their endowments. And so it's, it's another drain on Harvard's resources. And you've seen the Trump administration really be careful in going after those resources.
All right, so appreciate it. Brooke Sutherland, Bloomberg News, Boston Bureau Chief. She does write the Bloomberg Industrial Strength newsletter. She joined us from Boston. This story, by the way, in the top 10 among the most read on the Bloomberg.
4:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a number of developing stories. President Trump has unveiled a new round of tariff demand letters, including a 50% rate on Brazil, citing the treatment of former President Jair Bolsonaro. Autodesk is weighing an acquisition of rival engineering software provider PTC Inc., this according to sources. An update on Wall Street today with the Dow, the S&P, and NASDAQ all advancing. A rally in several big tech names spurred a rebound for stocks. NVIDIA briefly hitting a market cap of $4 trillion. S&P 500 index up 37, a gain there of 0.6%. NVIDIA, by the way, up 1.8%. The Dow up 217, up 0.5. NASDAQ up 192 for the NASDAQ Composite Index, a gain today of 0.9%. Our Mag 7 index up 1.1%. The 10-year at 4.33%. The 2-year 3.85%. Gold up $10 the ounce, up 0.3%. West Texas Intermediate crude 68.31 a barrel. Brent, the global benchmark, at $70.15. Bitcoin printing $112,000. That is a record right now. Bitcoin retreating to $110,910. So an update for the U.S. equity markets as investors keep an eye on tariff developments. Stephen Skanke is Chief Economic Advisor at Keel Point. And right here on Bloomberg Business Week Daily, he said investors cannot ignore the potentially inflationary effects of tariffs.
I mean, it's great that President Trump is not concerned about tariffs and inflation, but the rest of the economy and even financial markets are certainly have that as something that they are concerned about.
Stephen Skanke of Keel Point, interviewed right here on Bloomberg Business Week Daily. Again, our top story at this hour, President Trump unveiling a new round of tariff demand letters, including a 50% rate on Brazil. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Well, 6 months into President Trump's second term, the outlook for global trade has never looked more uncertain. I mean, listen to what we just heard from Charlie Pellet. The real sinking as the president unveils a 50% tariff on the country's goods. But over in China, manufacturers are debating whether to leave China, which has been saddled with some of the steepest U.S. tariffs. Now, India is seeking to cash in on the potential rewiring of supply chains. Working in its favor are its army of young workers and wages that are a fraction of those in other Asian manufacturing powerhouses. Dan Strumpf and Ruchi Bhatia write about the Made in China playbook that's helping an India manufacturing boomtown grow. Christina Lindblad is Global Economics Editor for Bloomberg Business Week. She's the editor of the story. Check out the story now on the Bloomberg terminal and at bloomberg.com/businessweek. Christina joins us here in the Bloomberg Interactive Brokers studio. So is it too early to say whether China's loss is India's gain? Like, is this working already?
I think there are signs that it's working. I would not crown India yet, you know, the factory of the world. But, you know, ever since the first Trump administration, there was talk already that, you know, this was the economy and that would probably reap some of the biggest gains. But there were always so many obstacles. I mean, we're talking about a country that launched this big campaign, Make in India, in 2014. And the goal was to get to manufacturing be 25% of GDP, right? Which was a level that China reached many, many years ago. And they're still at 17%, a little above, and it's kind of sort of flatlined for a few years. But we went to a place, the state of Tamil Nadu, where they've already hit that. And part of the reason is they're using kind of this China playbook in which like local officials are just helping, you know, clear any obstacles for companies that want to come and set up operations there. And, you know, we had companies saying like, you know, they'll you know, you tell them what do you want and they'll show you 12 sites, you know, like right away. They'll like, you know, accelerate hookups to the electricity grid, water, you know, like build access roads. There's good access to ports. So I think these are, you know, and also one of the issues that India has had that China hasn't had is that there's a very complicated Byzantine system of land rights, and that has often made it really difficult for companies to piece together large enough parcels.
I mean, are people asking and saying, listen, we know we've got to increasingly move our supply chains away from China. So this company that you talk about in this area. I mean, Christina, are we seeing the demand there for people to have an alternative to China?
Yeah, absolutely. I mean, we interviewed one Taiwanese firm that has factories, on mainland China, and they were, they've already had at least one factory in northern India, and now they're building this hub in the south. So they're very interested in sort of, having this springboard for exporting, in this other Asian country, which, like you said, has much, much lower wages.
When we talk about alternatives to China, the Trump administration goal is not to have U.S.-bound iPhones made in India.
Right.
The Trump administration goal is to have U.S.-bound iPhones made in Texas or in any country, any state here in the United States. Is this a risk for India?
Not so far. I mean, we're not finding that many examples, honestly, of people really bringing manufacturing home.
Well, so that's the thing. But is the penalty though?
Absolutely.
Is the concern over? Okay, this is a good place to make stuff,
you're right,
but it's not the U.S.
What we've seen is this whack-a-mole trade policy, right? Like, I mean, look at in Liberation Day, the Liberation Day tablets, as I call them, what the Vietnam had the highest duty, right? And that's because a lot of manufacturing had started moving to Vietnam out of China. So there has been, this kind of we have to keep chasing, looking where people are going, where companies are going, and trying to sort of, forestall these strategies. It's like China plus one, China plus two. I mean, but the obstacles to bringing that production home to the U.S. are so great. I mean, for in many industries in which the supply chains just don't even exist here anymore. So we have a separate story in the magazine, where we talked to small businesses, and they were like, okay, I'd have to find this and this and this and this, you know what I mean? But I do think India has, is well placed to cash in. But like Vietnam and like other countries that, that have seen some migration of factories outside of China, they're definitely in the crosshairs.
How are these changes settling in or sitting with folks in India? I mean, India is so massive, right? And you've got southern states, you've got it's not like it's just one kind of thought, right, about where the country goes. And I'm just wondering how that creates some strife within.
Yeah, there's some tensions politically because states like Tamil Nadu are saying we're contributing, a greater share to the fiscal, to the treasury. But at the same time, the BJP-led government has floated a proposal that would change representation in one of the houses of Congress that would dilute, the powers, the representation of some of these states. So they're fighting back against that. So there is a bit of jealousy too from other states. I mean, everywhere in the U.S. and everywhere, the use of fiscal incentives at the local level is often a sort of beggar your neighbor game. So
yeah, exactly.
Christine, the piece goes into a little bit of the history of manufacturing in India and the image that the world had of in manufacturing in India. Like until the 1990s, this was not a place known for quality goods, but then there was a transformation that happened. Take us into that.
Well, for a long time, it had all sorts of import controls and regulations. That
it was insular, right?
Yes, very much. And that actually meant that Indians were stuck with lesser quality goods. And then, but then there was this wave of liberalization, like you saw in many developing countries, of lowering tariff barriers and taxes, and so that that has really spurred great improvements. I think one of the areas where there's still, they still have to catch up is like education levels are lower generally than in China, so that's an issue sometimes. I mean, in Tamil Nadu, governments have put, an effort and money behind education. And that's, I think, one of the reasons that they're being successful in attracting investment. It's funny because people here say, well, do you really have to be educated to work in a factory? But I mean, we're talking about, you have to have literacy levels, things like that. So in developing countries, definitely we see a lot of correlation between education.
Well, I think that's something we've learned about China, that we just thought it was these really low-skilled jobs, people just sitting, kind of widget manufacturing. But it's not the case when you think about the iPhone or so. Very, very highly skilled, right? And so I think our concept of manufacturing has to kind of evolve in terms of what is needed to make a lot of certainly more sophisticated, especially when it comes to electronics or iPhones or the like, right?
Yeah, I mean, one of the companies that we interviewed for this India story is a company called, it's mostly known by its abbreviation TEAL, and it's like a factory of factories. They make equipment that gets deployed in other factories, and they have very like high end and like able engineers who are building like mechanical arms and like wiring assembly lines together. I
mean, and the other thing is, just to follow on that, forgive me, and you guys write in the story, for all the strides Southern India has made toward becoming a global manufacturing hub, factory owners say there's still one key shortcoming. Even if their factories are based in India, they continue to rely on components and materials imported from China. So it's just a reminder of how entrenched China will be for a while in our system,
right. I mean,
in our global manufacturing system.
You see sometimes, it takes a while because we see it in the auto industry often, for example, when a new plant opens, this happens everywhere, like that they start to pull their suppliers closer to them. But that's usually for higher end stuff, right?
Yeah.
So things like plastic doodads and wires, I mean, all of these things that come from China, we don't even think about. It remains to be seen, really, like how much, all of that will migrate to.
I don't know if you guys do this. Like I do this when I order, whether it's Amazon or something, and it says, product, place of origin or something. Like I just increasingly am doing that to understand how much China is embedded in our system.
I never do that because I just assume it's from...
Just assume. Yeah, which is fair, right? Because so much is.
So this is... No, I just thought of something that I was on vacation last week and my parents got this package delivered and they were like, oh, they were so excited. We've been waiting for this. And they opened the package and it's these 2 grill scrubbers. And my dad and mom saw a piece on, I think, like PBS about how this entrepreneur set out to try to build something in the United States entirely of U.S. parts.
Wow.
And he only was able to make this grill scrubber. And he made it in the U.S. and he couldn't even make it out of 100% American parts. There's one part on it that's from Costa Rica because he just couldn't do it. And it's a thing that cleans a grill.
Yeah.
$75 because it's made in the U.S. My parents, they were so excited. They showed me the PBS clip and but it prompted this whole conversation about how difficult it is to build these things entirely domestically.
Yes, we're following a couple of companies on their quest. Not ready to give you details, but they're gonna be great stories because it's amazing, all the obstacles.
I believe it's the Smarter Scrubber Grill Brush.
That is it.
By the Smarter Everyday's
Free
Destin
advertising.
Sandlin and J.J. George's John Youngblood.
Wow.
Designed to be 100% made in the USA.
Have you gotten your I've gotten a tariff bill. Like I had something came from, and I'm like,
the little tax at the bottom.
Yeah, but I mean, because I have to pay for some reason. Like it was during Liberation Week, and they actually opened the shipment, and unbeknownst to me, my Danish picture was made in China. So but it's everyone's just been trying to figure it out.
It's definitely raising awareness, though, right? As we think about it, I feel like COVID did the same thing. It's like all of a sudden we realized, right?
Yeah, it's not bad to think about where things are made.
No.
I've seen the opposite happen too, where now companies are saying, "Hey, our tariff relief sale is ending." So as soon as
buy
next
now,
week, buy now because prices are going to go up because all the supply of stuff that we bought.
So a lot of people are saying that right around now, a lot of companies are basically have dwindled down their sold down their inventories. Are going to have to put in new orders. I wonder what this White House strategy is this week about announcing all of these.
Does this extend it?
Well, but I mean, they're saying extension at the same time. Every day brings some new announcement about
Makes it tricky.
Threat.
You see the market. It plays out in the market in it. Thank you so much. Because I think we've all been thinking it's just an easy And you realize not always in terms of flipping things maybe to India, but they're making some inroads.
Yep.
Christina Lindblad, thank you as always, global economics editor for Bloomberg Business Week and the editor of the story. You can read the story now on the Bloomberg terminal. You can also do it at bloomberg.com/businessweek.
Not a record day for the indexes.
We didn't hit a record, huh?
S&P 500 up 0.6%. The NASDAQ Composite up 0.9%. The Dow up 0.5 percentage point.
I'm Carol Masser, along with Tim Stanovic, and let's get to Bloomberg cross-asset reporter Emily Graffeo with some stocks on the move today. And I love this one, AES, because it's the number one gainer, I think, in the S&P 500.
Yeah, it was the number one gainer. It was up 20% today, ticker AES, and that's the name of the energy company as well. It was the biggest stock jump since 2008. And we had a scoop from Bloomberg News today about some deal news. So this is a renewable power company, and they provide the company to tech giants like Microsoft, and they're exploring options, including a potential sale amid takeover interest. This was according to people with knowledge of the matter. But the story cited several investors, potential investors, Brookfield Asset Management, BlackRock's global infrastructure partners have been studying AES after the company's shares lost about half of their value. So ripe for a takeover.
It's pretty interesting.
And we saw a really big jump today.
Yeah, massive jump.
I know every morning you kick off your day with a large can of Monster Energy.
Speaking of power,
yeah,
Jolt.
And maybe they shouldn't be using cans anymore.
What are they going to use? Glass bottles? Even more expensive?
They have potential aluminum tariff pitfalls, we could call them, because this stock was one of the worst performers in the S&P 500. Monster Beverage, ticker MNST, it was down 3%, and they got a downgrade from Redburn analyst Charlie Higgs. When I first saw the downgrade, I thought it was going to be some read into the consumer or like shifting,
which would have made sense,
preferences on energy drinks. But in fact, the analyst cited valuation, but also gross margin pressure from aluminum tariff increases. So there's an unexpected kind of stock move, but it's actually related to potentially more tariffs. The analyst noted that he expects gross margin pressure due to tariffs on imported aluminum, which increased from 25% to 50% in June. And who knows what will happen next with those rates, because it feels like everything's been changing.
That's a big move, though.
Yeah.
Like, and potentially you think about, okay, so who eats that? Who eats that? Like, does the...
Who drinks it?
Who drinks it?
Yeah. And I mean, at least according to this analyst, it weighs on the company's margins. But of course, they always might have that option to pass it down to the end consumer.
It's not just Monster Energy. They own Burn Energy Drink, NOS, Full Throttle, Relentless, Mother, Rain, Predator, Bang, Canarchy, and Tor Water,
It's like they
among others.
It's like they opened up your pantry.
Yeah, totally. Hey, speaking of eating, let's go get some conveyor belt sushi.
Yeah, this one was, I just thought you guys would appreciate this one.
You know your audience.
Yeah.
Thank you so much.
It's a small cap stock, which, you know, they have a number of analysts on Bloomberg who rate this stock. Kura Sushi, I think I'm saying it right, ticker KRUS. It's a conveyor belt sushi chain. They have at least one location in New York, and the sushi
Flushing
comes around on a conveyor belt, and people buy it. Again, I thought there was going to be like a macro story in here, but they raised their sales guidance for the full year, but the stock it fell quite a bit today. And then we also had a number of analysts saying that this is a very big, lofty valuation here. So this company went public in 2019. It's up more than 500% since that IPO. Citi said that they need a longer track record of earnings outperformance to justify this lofty valuation. But conveyor belt sushi is apparently an area of Wall Street interest.
I'm just going to share. Tim was checking out some video, right? It was kind of fun.
Yeah, it was pretty cool. The website has a nice little video of the conveyor belt.
Yeah, and that stock was down about 12% today.
All right, Bloomberg cross-asset reporter Emily Graffeo, Stock Movers Podcast, 5-minute episodes, winners, losers. Find it on Apple, Spotify, or anywhere you get your podcasts. That's going to do it for us. Have a good and safe evening. Balance of Power starts now.